Hello, Andres. Welcome to Relentless Pressure Stories of Resilience. Resilience is the theme. Go ahead and introduce yourself.
Hey, Giancarlo, nice to meet you, and thanks for having me here. So I'm Andres Klaric. I'm the co-founder of Fuse. I was born in the U.S. I was raised my entire life in Bolivia. I worked in finance for 10 years, and like 4 years ago, I decided to take the plunge and start my own business.
Great. And what's the name of your business?
The name of my business is like here on the on my screen. It's Fuse. We're a loan origination system. We sell software to banks, credit unions, and finance companies.
Okay. All right. Before we go into Fuse, let's go into your educational background.
I grew up in Bolivia. I started my college years in the U.S. I first started at Notre Dame. You go Irish, massive Notre Dame football fan, also massive Tex Longhorn fan because of my dad. But uh, it's the way that I hedge. I have an SEC and an independent on the college football side. Then I transferred to Penn after 2 years in Notre Dame. So I did 2 years and 2 years both for my undergrad. That's on the education side. Then after graduating from undergrad, I went to worked at a bank in New York, then worked for a couple of investment funds. Went to Harvard for my MBA after 4 years of professional experience. And I met during my MBA, I met my co-founder. That was 9 years ago, and I still, despite the fact of all the formal education opportunities that I had, the biggest kind of life lessons have not really come from like formal education. I would say, in terms of dealing with rejection, my favorite days were like at the car dealership when I was 18, 19 years old. That was awesome. Just having to deal with like people that just don't trust you out of the gates, right? You're a car salesman, right? That's kind of like the worst you can be in the perception of like trust. I think lawyers and car salespeople are like the ones that are perceived as the lowest trust folks. And uh, starting with that being your first job, I think it built a lot of resilience in me out of the gates. And then, um, of course, profession the formal education days kind of sprinkled into those experiences. But I don't know if your audience or you would agree that you learn by doing for the most part.
No, absolutely. In college, it's a lot of theory.
Yeah,
But out in the real world, you have to actually figure things out. It either works or
yeah,
it doesn't, right? If you're a
yeah,
salesman, I mean, you only have one chance to try to sell whatever you're
yeah.
trying to sell. But yeah, I'm sure that your time as being a salesman is really helping you out with the startup, because when you're
Mm.
the CEO or co-CEO of a startup, you have to be everything, especially a salesman. You have to be able to sell your business, not only to investors if you're trying to raise funds, but also to the consumer, right?
Yeah. Yeah, your clients, you're selling all the time. You're trying to convince people out of like their safe, very safe jobs to come and join a startup, right? Like, which definitionally is a very risky value prop, right? But they need it, and the way that I always said it, right? Like before bringing on that, you need to convince yourself, right? Like, and I remember when I was looking at becoming a founder, starting my own business, it needed to make sense for me, right? Like, so I spent my own money in the first couple months of the business before I even raised any money, because if I don't believe in it, who's going to believe in it, right? And in that kind of belief, it starts becoming contagious, right? It's kind of like this snowball effect, right? And some people compare it to a cult, but it has a little bit of that, right? You definitely, if not a cult, at least it's something that it has like a lot. It rhymes a lot with it, right?
What
Because
what does what is like
uh,
cult?
just the process of building a company, right?
Right.
You create it's because you're believing on, first it's in the ether, right? It's an idea, right? It's saying we're gonna go there, right? It's like
Right, you're taking
Columbus.
something from idea conception to actual
Yeah,
finished product that is going to be used by a consumer.
exactly. Think about Columbus saying like, if we go west, there's going to be land. It's like, well, no one had done it, right? Or very few had done it and come back. The same thing happens with a company, right? Like it's like there's the size of the market, and like if we build something and we do play our cards right, we're going to win. But you still need to do it. So,
Right.
and that belief that you build into the team and culture, it's what many people will describe it as a cult, right?
Right. And what do you do to create that culture within the company, like team building? Do you do any team building exercises? How do you create a bond between you and
Yeah,
your team?
I would I would say you just set the goals very real. Like we have a very type A culture, right? So I wouldn't describe us as like the kumbaya of, like, if anything, people come here because they want to win, right? Like, and the way that uh, describe it with my co-founders, like we're not a championship team, we're a dynasty team, right? Like we're not building just to win a championship. We're trying to be like remember us and be an unknown. We're not going to be a fluke here, and that takes not just like a short-term mentality. That takes to like, okay, we're going to build the foundations of something that is going to outlive us, and it and that translates into the way that you kind of create the systems, the way that you hire people, the way that you think about long term, the way that you map product, the way that you think about pricing your product, the way that you think about investing in relationships. So if you're thinking like just short terms, uh, you're going to treat things very different, right? So that's kind of what I
What
would say.
was
Like,
that a big selling point to the investors? Is that what they were looking for? Because you're a VC backed company.
yeah,
Actually, can yeah, was that one of the biggest selling points to them? And also walk us through the
yeah,
process of raising funds, going from idea inception
yeah.
to that seed round to Series A, etc.
I think the biggest with VCs, what they want is a very clear value proposition for the end market, right? That the market is big enough, and that the team is it's a killer team to actually go do that, right? Because it, VCs, like 1 out of 100, the companies is actually going to return the fund. So they're betting on you becoming a decacorn, right? They're not betting on you being 10x. They're trying to 100x their money on you, right? So that's kind of how they see it. So they know that at the onset you're an idea, but they're like, this is a very well thought idea, and the match of idea, market, and team is solid. So let's go back this, folks. There's an entire strategy around how you go about approaching venture capitalists. First and foremost, it should not everyone should look for VC, and not it's not for everyone, and not everyone can, right?
Right. Most businesses should focus more on organic growth, traction,
Yeah,
bootstrapping it, and
yeah,
that's gonna be the best route for a lot of businesses out there.
yeah. Most
Why
business.
was VC funding right for you?
I think one, because we were in this segment of market that like VCs kind of are interested. Second, I like the speed and discipline the VC brings. Like the way that I saw it is, I want to use my 30s and early 40s to really just go through the grinder of building a business, right? And I wanted to get as much help as possible in the early days, and do it in a time commitment that like there was structure, that there was discipline, that there was pressure. Not that I wouldn't put myself that pressure, but VC helps you. It creates leverage, right? And if you can raise VC money and you want that money, it could be a very it could really accelerate things for a lot, right? Of course, then because there's many other things that we can talk about, but like, there could be negatives. But for me, it was a deliberate choice to do it that way at the speed and at the pressure that it brings alongside with.
Right. And I saw in the notes that you turned down a YC offer.
Mhm. Yeah.
YC is Y Combinator, correct?
Yes.
Okay. Explain what that is, and also
Mhm.
why did you turn down the offer? Because it seems
Yeah.
like that's something that most founders would actually accept.
Yeah, no, Y Combinator is the largest accelerator in the world, right? Like Airbnb, like a number of big names have come out of that cap. I think like Coinbase. I'm not sure. There's like a number of those folks that actually came to Y Combinator. Uh, I think we looking back to it, I think well maybe we will act differently. But at that point, the business was a consumer lending business. That was before we pivoted into B2B. business to business. So we were selling to consumers rather, and we were, uh, in general, my take at that point, that this was 3 years ago, right? Different times, was that Y Combinator was a very good platform for all the types of business, and not necessarily what we were doing at that time. So we had also, in parallel with our Y Combinator application, we got funded, right? So we thought to ourselves, hey, we already raised a good chunk of change. Um, Y Combinator, usually people use Y Combinator to raise money. Like, we already raised the money. Is it really worth the dilution, right? So you start asking yourself all your questions. And we spoke with investors, we spoke with people that we trusted, whose advice we thought was relevant. And we came down to the conclusion that for what the business was at the time, uh, the the benefits were not there fully. Fast forward 4 years later, I think had we been in the zip code in which we're operating today, I think we would have probably think differently. I don't know if the decision would have been different, but at least the process of the would have been a little bit different.
Right. And
And
quick question.
uh,
When you raised money, VC money,
mm,
VC funds, did you have any revenue at that point?
no, we were an
No.
idea.
So how do you value a company that doesn't have revenue?
We had some uh, idea of some traction points, but uh, I I think at that point it was more like, you look at the space, you look at the size of the market, you see how what roadblocks exist for you to get there, and that's kind of what seed investing is, right? In general, the the it's a concept. There's some early signs of like, hey, like, we're actually signing a couple of folks. We're seeing we've done some testing here. So what I did before racing was, like, I run a bunch of, like, marketing tests to get a feeling of what was the acquisition cost for customers, and I saw that it was pretty cheap, right? So that's kind of how you say, like, okay, listen, if we actually built an entire infrastructure around this, um, there's an arbitrage that can be done, right? So, and that, and then you talk about thesis. It's a pretty well put together, like, thesis on, like, a bit. It's basically a business plan, right? And you try to be very deliberate on which type of investors you speak to, because the last thing you want is just shotgun and say, like, I'm going to speak to every single investor out there. It's like, that's not how it works, right? If you want to build the Airbnb of something, or the Atlassian, or whatever type of other business out there, what you want to check first is, like, who invested in businesses that look a lot like mine, but in different industry verticals, right? So you want to go and talk to those investors, right? Because otherwise, if if you're in consumer retail, you're not going to go ask money for someone that's industrials, right? So very deliberate. Also be very uh, aware of, like, what the differences between, like, follow-on funds and lead funds, and also the stage in which they invest, right? Like, maybe you've heard about these big funds, but they don't do seed funds or pre-seeds, right? So very important to know what stage they invest in, and if they lead rounds, right? Otherwise, you can find yourself wasting a lot of time.
Right. It makes sense to look for investors or investment funds within your sector, within your industry. So okay, let's focus right now on Fuse, right? So you're a co-founder of Fuse. Fuse is disrupting the lending industry with
Mhm.
its unique loan origination system. So explain what a loan origination system is for those who don't
Yeah,
know, and how is
yeah,
your system different? How is it disrupting the industry? And
yeah,
also, what value would it bring to the lending institutions?
yeah. Excellent question. I think the best analogy to a loan origination system is an airport, right? You the application for credit is kind of the plane's landing, and there's once the plane lands, means the application, you need to put on gas, jet fuel, and, like, replace the passengers need to go on and off. The LOS is kind of the same, right? Like, an application lands, you need to verify underwrite that customer, see if they qualify for the loan, see what loan they are applying for, and making sure that that entire process is automated, right? It's not something that someone lands and say, "Oh, what do we do?" It's someone in Arkansas. That it's like, no, no, no. How can we minimize keystrokes? Use technology as much as possible so that application takes no time or very little time, and that once that customer is shown a yes or no, that all the other processes that need to happen afterwards are put in place. In the case if they get denied, there's like legal disclosures that need to happen. If they get approved, what do they need to show us for us to send them the money, right? So in that entire waterfall of things lives in this system of record as the loan origination system, right? So that's kind of what in the quick and dirty on a loan origination system. In terms of like what is our value proposition for lenders, first and foremost is reach levels of automation that are flexible and like much higher than what they have, but at the same time being able to gauge how much they want. But they might be comfortable with 10% automation. Maybe they want to be 100% automation. We give them that full latitude of things to do. Then it's integrations. All the process of automation is powered by integrations, like meaning like credit bureaus, identity verification. And what we give them is like the deepest suite of like partners for them to actually leverage. And last but not least is like dashboards, right? Humans are in the loop still. So whenever people are helping that approve a transaction, that those dashboards are the ones that people use, right? So you're an underwriter or funder, you have a distinct view. And what we want to do is minimize the amount of training that they have to go through so they can be additive to the process very early on. And most importantly, I would say overall is make it that these tools are intuitive for non-technical teams, right? In general, the problem with technology is that it's cool, but like imagine if you had to write the code for ChatGPT, right? What you like about ChatGPT is the fact that you don't need to understand what's happening, right?
And the great
You
thing with
still
ChatGPT now is that you can ask it to code a website for you
exactly.
or an app.
Yeah, it's the same thing for us, right? Like our customers have historically lived in zeros in a world of zero ones. What we're bringing is like that level of abstraction. We're actually making it easier for them to kind of use the systems that back in the day, not back in the day, at the present moment are very complex and difficult to maintain.
Yeah,
So we're
I would assume that the banking industry is probably it takes them a while to change their system, so they're probably a bit dated.
yeah, it's kind of like you'll be surprised in the spectrum of changes, but yeah, you could have folks that are running in 1988, like pretty much like Excel, and folks that are actually using AI, right? Like the spectrum is pretty wide, but you're right. In general, I wouldn't, because it's such a regulated industry. The the bar is pretty high for the adoption of technology. It's not they're not going to take a flyer, right?
Right. And with your system, who coded this for you? Did you do the coding or
Uh,
did you hire a coder?
my, no, we have a team of engineers, right? My co-founder is highly technical. That's kind of how we did it.
Got it. Okay. So Fuse right now, where are you right now in the stage of funding? Are you Series A or
We're
Series
like
B?
we no we're like in kind of yeah in that territory you can say.
Well, what do you mean?
Like we're like past seed stage.
Past the seed stage.
Yeah,
Got it. Okay. Um, and what kind of financial instruments did you use to raise funds? Did you use
yeah, that's a good question.
convertible notes? Did you use safe? For the entrepreneur out there looking to start their own startup,
Yeah,
let's discuss financial instruments to raise funds.
yeah. We started the first couple bucks in were safe notes, the YC safe note, like the standard one, and then we just did price rounds right afterwards. Um, in general, what other instruments exist out there? You have um, venture debt. They usually is like debt that comes with equity warrants, so it's the right to kind of like buy X amount of shares at the last. Usually comes those warrants come priced either at no, they have $0 strike price, or they come at the price of the latest round or whenever that there was priced at that moment. There is of course just more traditional debt. that it usually doesn't go above whatever amount of cash you have if you're like a money losing startup. There's as you there's distinct types of equity, like just more preferred equity, more common equity, and as you kind of get more sophisticated on the road when you start like selling parts of the business, in the terms of secondaries, you might have what it's called like seller financing, right? Like, for example, if I've seen it when I was in private equity, right? Like we will buy companies, and instead of getting a loan from a bank, sometimes a percentage of the financing will come from the sellers. The sellers will be like, okay, you owe me this at this you price me at 10 million. I'm gonna sell. I want to cash out five, and you're gonna owe me the other five in the form of a seller note, right? That has
So at an
X.
interest rate.
Yeah, yeah.
Got it.
There's multiple avenues. So that you're the new owner, but you still might still own the prior owner, like that seller note, right? But you do not owe it to a bank. You owe it to like an individual or investor group.
Okay. And going back to the education, so I said earlier that especially in undergrad, there's a lot of theory, and it's
Mhm.
not necessarily practical in the real world.
Mhm.
But would you say that the graduate program at Harvard Business School is more practical? And would you recommend an MBA program to an entrepreneur?
Yeah, I mean, I think like the an MBA program, you make of it what you want it to make, right? There, in the case of Harvard, there's no grades, right? Like, I mean, you cannot just not show up, but there are no grades, right? So you could either go very academic and like try to learn just try to just focus on that and nothing else, or you can just treat it much more as a networking opportunity, right? Like, and part I would say that part is the one that has given feels the most ROI, right? Like my co-founder and we met at Harvard, right? Like, uh, I would say that in itself is uh priceless, right? It gave me like the yin to the yang to building a business. Do I recommend an MBA? It depends, right? It depends what you want to do in your career, right? I think that the knowledge, it's like the theory, it's already there. Like you can watch YouTube videos about it. Like what the plus is just the people, right? You're the go there. You learn from your peers, right? The case method is not. You have the professors that are kind of guiding the conversation, and like they do a great job at guiding the conversation. But what makes the difference is the fact that like everyone has read the same case. We start discussing, and that tug of war in terms of like uh, discussing about what idea is the best one. It's kind of what makes the process of learning.
Yeah, and
Um,
it forces you to look at problems from a different angle because you may have
yeah,
perceived it a certain way, but and then you have a classmate that perceived it another way. You're like,
yeah,
oh, I didn't see it that way. So it forces
yeah,
you to to just look at the world a different way.
exactly. Or like someone just is some people are just so good at distilling information, right? And you're
Right.
like, I'm just so dumb compared to like some people in terms of
It,
like
it'll
just
it'll definitely humble you
yeah,
for sure.
yeah,
The
yeah.
levels of
But
intelligence that you encounter at graduate school is definitely
yeah,
humbling.
I would say the smartest people I met though were not necessarily, I would say the best spoken people, but the smartest people I think there were a couple guys in undergrad that I met and gals that were just beasts in
Right.
undergrad. And it maybe by the time you're in like your late 20s, you go to business school, you kind of like put on a different cloak in terms of how the raw smart comes out, or maybe you become a little more. But I do remember being in my early 20s and running into some folks and just being like, you're just built differently. Just
Right.
yeah.
They're just the
And
most well-read individual. They know about every subject.
oh, just
And
the horsepower. Just
right.
even if they haven't read, just the horsepower. You just see some people that are just
Just the
yeah,
processing speed.
so yeah, yeah, exactly. And just yeah, just
Right. Okay. So to wrap it up, Andres, so think about the darkest times in your life, the lowest points.
Yeah.
And what advice would you give your younger self?
Mm, I mean, it it truly. I've never been a person of nostalgia of like really thinking it used to be so much better, right? So when that's a kind of a short way of saying like things get better. Like in general, the world gets better, things improve. And I think that the younger self sometimes might be like, oh wow, when am I gonna get there, right? And you forget about enjoying that kind of trajectory, that process, and you get trapped. But you in those darkest moments are just part of that journey, right? And they, I think might have read somewhere, right, that like hardship is like the flavor to success, right? Like success without hardship, it's tasteless. So I rebel on those. I actually the hardest moments are the ones that those valleys make the peaks so much better. Imagine a life without valleys.
Oh no, absolutely. I cannot imagine a life with no adversity. I mean, it would just
Yeah,
make life very boring, right? And you there would
yeah,
be no appreciation of the good.
yeah.
That's yeah,
Uh,
that's the way I see it. So
mhm.
okay. So Fuse, it's a VC backed firm. Where can people find out more about Fuse? Are you guys hiring? Yeah,
Yeah, we're actually hiring our founding account executive. So if anyone here this in the next couple months, probably still the relevant opening, or we're always hiring engineers, but like that kind of salesperson is going to be very important. They can find more about Fuse on that at our website is fusefinance.com. That would be a great place. And please feel free to shoot me a message on LinkedIn. I try to be very responsive there. Like I've had great founders, great mentors in the past, and to the extent that I can return the favor, I will always do it.
great, awesome. All right, thank you so much, Andres.
Awesome. Thank you so much here, Giancarlo.